Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 2-hour price chart for Intel Corporation, stock ticker INTC. So here we can see that the stock is starting to show some fairly significant reversal signals here. We have fallen quite sharply from the highs. These recent highs were posted at, this would be 37.16. These were posted on July 17, 2024. So, we can see for the most part that, we have started to kind of reverse this broader breakout activity that we were seeing previously. Of course, it does need to be noted that the stock market as a whole has been under a significant amount of selling pressure for the last 2 weeks. Most of this selling pressure has been directed at the technology space as well. But these declines have been very broad-based, and we have seen a large amount of selling pressure in all of the Mag 7 stocks, and then throughout the S&P 500 and NASDAQ as well, and the Dow as well. So this is definitely not an Intel specific story by any means. For the most part, Intel was actually showing a fair amount of strength during the early portions of this sell-off. As you can see here, this early rally into the 37 area was occurring as large portions of the market and large portions of the technology sector were being sold off to the downside. So the overall performance here has actually been favorable compared to most of what we've been seeing, and I'm talking about every major stock: Microsoft, Apple, Nvidia. These stocks have experienced major declines. And it's only recently that we have started to see these downside moves with Intel. So currently, we are looking at lows of this would be 30.95 would have been the low from the July 25 trading session. So we are coming back into sort of into the original breakout point. The next support zone that I would see to the downside as being significant would be the 30.59 lows, which were generated on July 2nd, July 2. So as we can see here, we're starting to come into contact with these areas once again. I would consider this to be a favorable buy zone if we were to bounce or fall into this area once again. Currently, this does look like it's the most likely outcome, given the fact that we have now fallen through all of the major Fibonacci retracements that were seen during this rally. So, essentially, if we're looking at these lows, from July 2nd, July 2, and $30.60, and then we extend these to the July 17 highs of 37.16, we can see that all of the major Fibonacci retracement levels have now been broken. Most recently, we did break through the 78.6% Fibonacci retracement, which came in just a tick above the $32 mark. So currently, it is clear that we're trading under pressure here. But overall, the cause for concern doesn't really seem warranted in my view, given the fact that this is a broad-based sell-off. It would be much more uncommon or much more surprising, if this stock was not falling into these trends. And as we can see here, these initial rallies here were continuing in the face of those of those broad-based declines. So overall, I would still have to say that Intel has done a very good job holding up under all this selling pressure that we've been seeing. I'm not excessively worried about these declines, and I do feel that we're moving right back into buy territory with this stock. So currently, we also have to look at the indicator readings and the exponential moving average activity. So as we can see here, the overall trend trajectory in the relative strength index, that would be this purple line down here, this zone at the bottom of the chart. We can see that we're still holding in fairly heavy bearish momentum, but at the same time, we are starting to enter into oversold territory. And if we kind of zoom in here a bit, we can see that we're starting to roll out of it as well. We have fallen below the 30 mark in the relative strength index. This would indicate oversold trading conditions, and now we're starting to slightly move higher. It's a little bit difficult to see because it still sort of looks like a flat line, but this purple line down here is starting to curve upward after falling into oversold territory. So that is an indication here that we are reaching a bottom relatively soon. And then if we combine that with the fact that there's major support, historical support that can be found relatively close by, this does suggest that we are likely to start seeing a turning point here relatively soon. In addition to this, we do also have to look at the trading volumes. Just get rid of this here. We do have to look at the trading volumes that have occurred during this move lower, because for the most part, we're really seeing a decline in trading volume. After seeing this initial spike high here to $37, we did start to see some profit taking in this area, probably because most of the market was selling off. And people were probably starting to become concerned that the same thing could be happening with Intel. Not totally surprising given the state of the broader market here. But as we can see here, as these share prices have declined, trading volumes have also declined. So this is not really, if you're bearish and you're short selling, this would not be an encouraging. This would not be an encouraging event. I mean, you would prefer to see spikes in selling pressure. These big red bars down here. You did see this initially as we were reaching the prior highs, but since then, trading volumes have steadily diminished, and that's not really favorable for the bearish outlook. And then in addition to that, we are actually starting to see some spikes in bullish trading volume, as we can see here in this trading bar here. So this is the most significant, the highest trading bar that we've seen recently, since those recent highs at 37. So all of this does kind of point to a potential turning point here. What I would like to see is for this trend line to break in the relative strength index, but we will need to start seeing a more forceful roll over out of oversold reading, out of the oversold indicator reading in the relative strength index. So here's the current market analysis for Intel Corporation, stock ticker INTC.